Well, time to talk to Paul Ryan about some real estate with Senior Economist from Proptrack. Paul, good morning to you. Let's talk rents, let's talk housing. There's plenty to chat about. And first of all, is the market really starting to re-emerge from the break?
Good morning. Yes, I think we're starting to see that. We're seeing listings come back onto the market, but I think everyone's waiting for kind of after that Australia Day long weekend for to really kick off those 4-week auction campaigns. We're seeing about 430 auctions this weekend, which is low, but that's not unusual for this time of year. So I think everyone's still kind of in the drowsy waking up period of the property market for this year.
All right, and what about the purchase market still awakening? The rental market remains hot. How are rental prices tracking?
Yeah, so this is in stark contrast to the purchase market. The rental market, lots of rental properties turn over in January. So that market is showing kind of no signs of slowing down. We just released the Proptrack rental report, and that showed that advertised rents were up 6.7% nationally over 2022. And in capital cities, advertised rents were up 10%. We've got fewer advertised rentals, available rentals for people to lease than at any time since 2003. So the rental market is incredibly tough for any renters out there, which is about a third of households. So this is increasingly, this is going to be the big issue in the housing market over 2023.
It's been tough and for a long time, hasn't it?
Yeah, absolutely. COVID had introduced a lot of challenges for the housing market, but initially it created challenges for regional rental markets in particular. But over the past year, the story of 2022 was capital cities, really. We saw capital city vacancy rates drop almost 1 percentage point. And now nationally, we've got vacancy rates pretty much everywhere across the country below 2%, which is what we consider really tough, tight conditions.
All right, so what is the outlook for the property market as we reopen to 2023?
Yeah, I think a lot of people have taken a break and taken a bit of a breather, and everyone's kind of looking to see how the property market restarts the year. We saw price falls throughout the second half of 2022. Those price falls kind of moderated to the end of last year. So whether we start the year with those kind of smaller falls as that big decrease in borrowing capacity we saw last year continues to weigh on prices. Obviously, the Reserve Bank's decision in early February will be key to kind of how the property market kicks off the new year. We are expecting another 25 basis point increase in interest rates in February, but the market's cooled on that idea. So market expectations for interest rates are a bit lower than they were late last year, which is a positive thing for the market.
Yeah, what about borrowing capabilities?
Yeah, I mean, that's been the big story over the past kind of 9 months or so. We've seen borrowing capacity down more than 25%. That's the big reason the prices are falling. It's not because demand isn't in the market or that people have stopped buying homes. It's that people can't borrow anywhere near as much as they could 9 months ago. So I think the big positives for 2023 is there's a lot more certainty around borrowing costs. We expect that there'll be a lot less of a change in interest rates this year than last year. And I mean, that's not surprising given that was kind of a record-breaking change in interest rates over the past 9 months. And I think there's a lot of buyers and sellers, people who are kind of looking to transact property that are after that certainty, which we're hoping is coming this year.
All right, we've certainly seen a lot of changes and surprises over the last few years. Let's see what 2023 brings, but always great to chat to you, Senior Economist at Proptrack, Paul Ryan.
Thank you very much.